Good morning, good afternoon, good evening, everyone, and welcome back to the breakfast show. I do love Nano Banana. I do love it. That's why we get crazy intros and great infographics during the video. I actually made a special infographic for today's discussion, one where we talk about a potential PayPal bank, believe it or not, So, good morning, everyone. Welcome back. Seems like we're going to have yet another red-ish day. Well, red day. Let's be honest, it's going to be another red day. Okay, let's cut the crap. It doesn't look that great, especially not if you are, of course, exposed to tech or more specifically AI stocks. Now, has something specifically changed or did something happen? Did the company come out and say that, oh, we are going bankrupt? We're not going to be making money. We are not going to spend huge amounts on infrastructure and data centers? No, the answer here is no. Now, today we also have some data that does come out, I believe now, or I believe now. So whoever gets the data, let me know down in the chat and then we'll pull it up on the screen. We have some unemployment data and some non-farm payrolls as well. So, if we look at what has happened yesterday, we can see this. This is what happened yesterday, and this is, I believe, extended hours, so don't look at that. Yesterday, we did have some big names that are quite red and that continue to be red, actually. We have Broadcom that's down 5.5%. We had CrowdStrike that was down, Oracle that's down even more, Salesforce, we had Tesla that actually reached all-time highs. So a lot of red names yesterday. Actually, if we look at the NeoCloud specifically, I know I did a video about those names yesterday. We had, of course, White Fiber down 18%, Applied Digital down 17%, Hut 8 down 14%, Cypher down 13%, Iron 11%, CoreWeave down 8%, and Nebius close to it as well. Chip names yesterday were 50-50. 50-50 with the biggest one taking a hit here, which was Broadcom. Data is out. Perfecto, so we're going to pull this one up. And let me actually change this to the extended hour pre-market so we see what's happening at the moment. And this will basically be it. All right, so Amit is helping us out here. Wunderbar. We have non-farm payrolls over 64,000 versus 50,000 expected for November, so a slight beat. Unemployment rate of 4.6%, so a bit higher than what was expected and the highest since July 2021. Labor market once again continues to show that a rate cut is needed, which brings us to maybe a change in probabilities, maybe not. Let's see what January gives us. January is still, no, it's still at 24.4% here, chance of a January cut. So could this data again force the Fed to cut more in January? I don't know. They said no. Currently, probabilities are quite low, 24.4%. Could this change? Discutable. Because the one in March is The one in March is still in favor of no cut still, 42.4% chance of a cut in March. So maybe after today that might change. Also, and someone actually reminded me of this, because I did check for a government shutdown. Well, the probabilities of a government shutdown in January, at the end of January actually, currently sits at 37%. Government shutdown at the end of January sits at 37%. It peaked at the start of December at 46.3%. We're now at 37%, which of course was much lower before. But yeah, this is still a risk, right? This is still a risk for the start of 2026. Another potential government shutdown could happen, could also not. It really depends on the politicians. So the data, the data I guess is not the best data, but then people will tell you that, okay, the fact that unemployment is higher, it's not good data, but it might force the Fed to cut. But again, do we want to have a situation where the Fed is forced to cut rates, right? Because we would like to have the scenario where we would like to have a scenario where the Fed cuts rates because things look good, not because they're forced to cut. But yeah, I mean, based on the comments that we've got last week, it does seem like the Fed does sound a little bit more dovish. And now, I mean, we're going to 2026, only expected, one rate cut. Maybe the fact that unemployment is a bit higher than expected, maybe that will force them to cut more than once in 2026. New background, yes, I took some profits to decorate and feel a bit better with myself. So yeah, if we look at pre-market right now, we do see some green, but literally not a lot. PayPal is green, and the reason why PayPal is green is because of this. So yesterday, this was announced. PayPal submits applications to establish an industrial bank to expand access to financial services for US small businesses. Now it says here for US small businesses, but the implications of PayPal having a bank, a bit like SoFi, right? SoFi is not a bank, it has a bank, which of course helped the whole SoFi ecosystem, which helps. In this case, with PayPal, it could help them as well. But remember, getting the permit is going to take a while. And so, as you know, I really like the nano banana. And so we have here this infographic. So PayPal Bank, vertical integration and margin expansion. How does this help the whole ecosystem? Well, if you look at the small to medium-sized businesses lending, so low-cost deposit funding, we've seen that with the likes of SoFi, right? The deposit is the lowest cost that you can have. This then leads to faster approvals and higher net interest margins. By the way, Alex Chris at Intuit, he was in charge of SMB, so he knows a thing or two about that. Then Venmo, one of the most positive parts of PayPal right now. What will you get here? Direct, high-yielding savings and debits, which leads to greater app stickiness, no backend fees, since, well, it's now all part of the PayPal bank. This is, of course, something that Alex Chris told us a long time ago with regards to Venmo, is that there is a ton of money flowing through Venmo, but it doesn't stay inside of it. This, of course, will change it. Then, the card networks. So here you have a direct principal membership. This is also something that they are asking, which eliminates the sponsor bank fees, which leads to pure profit on swipes. We're talking here about small cents, couple of cents here and there, but on millions and millions of transactions, still, it's quite a lot of money. Then as for the buy now, pay later business, same thing here. Direct balance sheet funding, which leads to lower cost of capital and increased profitability. Right now we're working here with KKR, we believe Blue Owl as well here for PayPal. Now we'll have Not now. Eventually, you might be getting PayPal Bank, which the whole business will benefit from it. Stablecoin, same thing. Direct access to the Federal, direct access to Federal, easy, cheaper, faster, fiat on and off ramps, which of course enhances trust. Margins go up. Simple. Everybody's about to leave to a midstream. Well, I'm streaming every day, and I think we still have 600 people that stay here, so it's still good enough. Do I? No. Why would I? Because you like my voice, I like these graphics. Voice and graphics, better outcome. Because visually, you can use it if you want, right? Just screen capture, use it yourself. I think it's a good addition. It's a good addition here. So all in all, to me, again, this is a positive thing. It will just take a while. Right? Becoming a bank, getting a banking license charter, it's going to take time. Probably a year, if not more. Do you remember the times where we were trading above $70? Those were the days. But yeah, I guess the market likes it because it is up 1.3%. But then again, yesterday we were up 1.5% and we ended the day red. So you know the deal with PayPal, it's the usual, the daily rug pull with this company. But I mean, it is news that came out of nowhere. Hopefully we do get maybe a bit more explanation from management about this move. Hopium, I don't know, but yeah, we'll see. It's an interesting move, and it's a move that makes sense. That's to me the most important part here. It's a move that makes sense because it will make the whole business even more profitable. We do have some more data that just came out. So we have here, US October core retail sale was 0.4% month over month. Estimated number was 0.2. Overall, that remains unchanged. Estimated one was up 0.1%, and this we've seen just before. Average hour earnings month over month up 0.1. Estimated number was 0.3. Average hourly earnings year over year 3.5. Estimated number was 3.6. Yes, indeed. Those were I wouldn't say the days, those were the hours. Those were the hours. Fun times. What else do we have? We have some comments from Besant on China. So far, China has done everything we negotiated. We would like to see China rebalancing on trade. China needs to increase domestic consumption. Not possible for China to continue the 1 trillion trade surplus. And the US-China could rebalance together. So, bit more, let's say, positive comments on this whole US-China story. Which again will take us, we're still waiting, right? We're still waiting for a big deal that gets announced. And I do appreciate everyone that stays on their couch for the live streams and don't go to other competing ones. Just kidding. You can do whatever you want, but I do appreciate all of you joining me each and every day. Apparently, we are going to see a new Fed chair announcement in early January. Supreme Court ruling on tariffs also early January, according to Scott Bessent. So early January, if we thought we would start 2026 with maybe a bit more of a boring market, guess again. I don't think that's going to happen anytime soon. What else do we have for you today? We do have some comments on Google. specifically on Google, and then some targets for 2026. House proposals built to advance data center build-out speeds, probably permits, right? Building permits would help a lot of companies. That's for sure. So yesterday, there's no specific reason why SoFi was down 5%, just like there was no reason why, Chime was down 6, Sezzle was down 6, Bull was down almost 6, Pagaya was down 5.4, SoFi was down 5.3, Shift4 down 3.8, Hood was down 3.5 as well. So Fintech across the board yesterday took a hit. No specific reason that I found. Neoclouds were down yesterday, also no specific reasons for that other than probably continued rotation away from AI names. Maybe still the after effects of Broadcom last week and Oracle, because both of these names were also down. Yesterday, Broadcom another 5.5% and Oracle 2.6% yesterday. But as I explained in yesterday's video, there's no specific reasons, just a lot of bad sentiment on those names, rotation away from AI stocks, which we did cover actually during the Sunday video. So yeah, good. Look, most of these names are still up significantly this year, right? I've seen a Wall Street Journal piece that came out talking about how CoreWeave is losing its groove or whatnot. And then I just checked and I see that CoreWeave stock is still up 80% year to date. Of course, again, not everyone did buy at the bottom or close to the bottom or is up triple digits. But we're not talking here about stocks that are down 70% year to date. No, they're down 50% from their probably all-time highs. Maybe they should have never been at their all-time highs to start with. But most of these stocks are still up triple digits, if not more. Rate cut odds slowly creeping up for, you mean for January? Already moving, or you're talking on Polymarket or Kalshi, one of the two? Ah, yeah, no, you're right. We are already at 28.8 now. So 28.8 at the moment. We were at 24 point something just a couple of minutes ago. Interesting. Where is Amazon? Why is Amazon performing so poorly? That is also, again, I've made this point. Let me pull this up. I didn't ask you to speak. YouTube just auto-playing these days. Shame on them. Amazon, right? I did a video about the so-called forever stock, buy and hold forever stocks. If you missed that video, I suggest you go watch it. But if you look at Amazon over the past 5 years has underperformed the market. Right? It's up, I think, 40-something%. The market is up way more than that. Of course, if you bought at the bottom in December, you're up significantly, so you should be fine. But the argument here that I've seen from a lot of, well, not a lot, but some comments talking about companies that the stock did not perform well. I mean, let's talk PayPal, Disney, maybe let's even say Amazon. Oh, this stock has done nothing the last 3 years, so why would I invest today? And I'm like, it doesn't make any sense. You are buying a company today for the future, not for what it has done in the past. Great company in the past can suck in the future, and bad company in the past can be very successful in the future. The prime example is going to be, again, Amazon. Amazon did not perform well over the past 5 years. Does that mean that Amazon sucks today? I don't think so. You are buying the company today, and if the company today has become much better than before, who cares if the stock has underperformed? over the last 3-5 years or so. Doesn't matter for me because I want to own the future of the company. And I believe that the future of the company, based on the current business performance, is going to be quite good. I mean, yeah, we cannot predict the future, but what has happened before does not guarantee that it will happen in the future. And I go back to the Amazon example. Amazon underperformed over the past 5 years. Do I believe Amazon will underperform over the next? Business-wise, nothing tells me that Amazon underperforms over the next couple of years. Of course, we are all making predictions/assumptions when we buy stocks. Yeah, because we're buying the stock today because we believe in the next couple of years this company is going to become bigger, more profitable, and so the stock should reflect that in the future. I don't think it's a good indicator. I think it's just an indicator. PayPal should have, the last 5 years is maybe a bad example because we had pandemic, work from home, so everything was artificially going the right way for a short period of time, and then you've got the after effects. So maybe the last 5 years is maybe not the greatest of indicators. I think just looking at the business, what the business has been doing is much better than just looking at a stock. It's like the people that only look at PE ratios and say that a company is good or bad. Like the comment at the start of the stream. Nebius PE is way too high. Sorry to say, but why are you looking at a PE for a company that's not profitable? Doesn't make any sense. Makes actually zero sense. Now, another company that has, of course, performed extremely well is this guy right here. Alphabet, Google. And we do have a quite popular analyst talking about the company and whether or not you should still own it in 2026 and onwards.
Joining us now, Mark Mahaney, Evercore Senior Managing Director of Internet Research. Mark, great to see you in person. We mentioned the Google 60%. Most of that move was in the second half of the year. So it's sort of an interesting dynamic here where it's no longer a top pick because of the recent run, but you still think it is firmly in the hold, in the buy camp, I should say.
It's a quality compounder. So we've had a stock that went from 15 times earnings to almost 30 times earnings in a 6-month period. You rarely ever see that. I think the real opportunity was it was so oversold. I'm not sure it's overbought. I don't think it is. I think it kind of hold its multiple. It's kind of at the high end of the Mag 7 in terms of the multiples. But I think it can hold it. And now it's a compounder, which means I think they can grow 20% a year. So the stock's got that sort of upside. It's not dramatic, but it's a name that you want to stick with because they've kind of proven everything they sort of needed to prove, which is that they're successful up and down the tech stack. What else could get much better about Google? I think that there's a chance for a re-acceleration in revenue at search, at YouTube. Waymo's still building out, and cloud's going to be north of 40%. I think that kind of growth next year. So I just like the fundamental setup in it. If you're a long-term investor, you stick with the Google.
How?
I rarely agree with people on CNBC, but I agree with him. I agree with him. I think we've seen the stock run up quite significantly, but again, the stock was oversold. The stock was priced as if it was dying, and it did the exact opposite. And yes, it is more expensive today, but is it overvalued? I don't think so. YouTube still growing nicely. Cloud is the growth there is going to continue to be immense. That's becoming more and more profitable. Search continues to grow until proven otherwise. Then, of course, you have all the other bets, right? Waymo, I just consider Waymo as an extra call option on the business. It's a good business. It's a very, very profitable business. The core business becomes just better and better. And search as a percent of revenue does continue to come down because the rest of the business grows much faster. So we're also kind of de-risking here from being too, let's say, focused or exposed to the search risk, let's say. I agree. I do think that going into 2026, it's a hold. To me, it's a hold for Google. Not saying it's a screaming buy.
How do you see Gemini 3? I mean, part of the upswing in Google shares is a perception that Gemini 3 is doing so much better. How does that play out into 2026 in terms of trajectory? What do you see in terms of uptake and other monetization?
I think actually that's one of the risks to Google because this is going to go back and forth. And, the ChatGPT 5.2 came out. I'm not sure it overwhelmed anybody, but, the models get better and better. And so the idea that Gemini is going to be the leader of the large language model board for the next year is probably unlikely. There's going to be a lot of competition in the space, which is great for all of us. In the meantime, I think you're going to get a new ad model at some point, or you're just going to get an ad model coming out of ChatGPT. So there's going to be real competition coming after search dollars. We haven't seen it yet, but it's coming. So you got like one or two pending negative catalysts. I don't think it takes the stock down a lot. And if it did, it'd be a great opportunity to leg into Google stock.
Do you think, though, on the large language model front, that it's about the model itself at this point? Or I actually think the models are almost so good that there's an argument made it's about who productizes the models best and fastest. Meaning, and I've always thought that Google should be the winner of this by a long shot, given, the proliferation of Gmail around the world and calendars and, by the way, Android phones, that if they could productize things that actually, really texted you back and really gave you an email to return and really saw where you were going next and was able to sort of think through all the different permutations. But for whatever reason, they haven't gotten to that place. And then the question is, can an OpenAI, which doesn't necessarily have all that data, but maybe through APIs into all these other outlets or through an Outlook or Microsoft, can do all of those things?
Well, I think what you said, the first part is extremely important. If Google got the right model, if it got the leading model, it had more monetization opportunities than anybody else because it could roll its large language model. It can roll Gemini 3, which they did very quickly, into YouTube, into Gmail, into Google Works, into the search, into YouTube, into across all of their assets. So could they monetize it? Absolutely, they could. ChatGPT is not going to be able to monetize as well unless they build out those applications that have got 1 billion users here, 1 billion users there. That was always Google's advantage. The question is when would they really turn on the product? And it helps that you had a lot of great competition from ChatGPT for them to do it.
Does anyone have Gemini in YouTube? Last time I checked, I don't think we have Gemini in YouTube. So strange statement there, but I agree. This is the advantage that a company like Google has. This is an advantage that Meta has as well, right? The fact that you have already different products and services with billions of users, you can monetize things much faster, sorry. The ChatGPT part has always been the same, and I've been saying this for the past couple of weeks now. It's who or how fast can they come out with a so much better hardware product that the adoption of ChatGPT is going to continue to grow and the monetization of it continues to grow. There is Gemini in YouTube. Maybe I don't have it yet. Yeah, but ChatGPT being tied to Microsoft is not a way to monetize. Because right now, how do they monetize it? It's subscriptions, and that's about it. What, licensing maybe, but that's about it. You need products. Either going to be a hardware product, which I think they're working on, or something else. How are you monetizing this otherwise? Because that's the biggest question. You need to monetize these things. The models for the day-to-day stuff, they're all very, very similar. Very, very similar. So Google, we are already exposed to a lot of Google stuff. YouTube, Google Search, Gmail, Calendar, the Android operating system. So that's easy. Meta, you have Instagram, you have Facebook, you have messengers, you have WhatsApp, you have, of course, AR, VR that will come, or VR already came out, smart glasses, so you monetize it through that. But all the rest, they will need, something to come out. I don't know how they'll do it, but it's up to them. it's up to them.
But I think the question long term is, are people going to go back and forth between a ChatGPT and a Gemini or some other service? Or do you think that you get sort of, because it's built into the product, that people then stay there? Or you could argue a flip side, which is the sort of persistent memory argument, which is right now ChatGPT has almost better persistent memory, knows you better, arguably, because it, I mean, knows you better in terms of like maybe how you write or think, but it doesn't know all the data about you unless it's, you know, porting in through APIs into other systems.
I would hope that people would kind of use both and maybe other large language models. I don't think there are going to be that many used in the future. I think we'll get some sort of consolidation here. 2 or 3, maybe 4 max large language models.
Does that mean that the whole business is commoditized? And therefore, then, is there the value prop? If you say to yourself, is ChatGPT or OpenAI worth $1 trillion? Is that possible?
Well, I guess.
The answer to me is probably no. It does become a commodity. The thing here is that building such a commodity, let's say, is costing a hell of a lot of money, and so you are probably going to still have. You're going to still have Gemini, of course, because it's Google. You're going to have Meta AI. You're going to have ChatGPT, XAI from Grok. That's still going to exist. And then some open source models that will pop up every now and then, for sure. But the adoption, again, comes from those that can distribute these LLMs through the products and services that they have. There is Gemini on YouTube. Okay. Is there Gemini? And what does Gemini on YouTube do? Yeah, okay, no, the Gemini API, okay, fine. Interesting. Okay, cool. Cool. Market is tanking again. Well, I mean, we are just continuing the trend from yesterday. Unfortunately, continuing the trend from yesterday. Now, what again, we've seen some analysts talk about what they think for the expectations for 2026.
CIBC Capital Markets releasing its official 2026 price target. The firm expects the S&P 500 to reach 74.50. That's a 9% gain from today's close. Chris Harvey is behind the call. He is CIBC's equity and portfolio strategy head. It is his first price target with the firm since leaving Wells Fargo Security earlier this year. Chris, welcome. Nice to see you. Congratulations on the new gig.
I appreciate it.
But you don't see 9% just 9%. You see a pullback first.
That's right. And it has a lot to do with what you were saying before. Risk at this point in time is just too expensive. You're not getting paid for it. And so we think there needs to be a repricing of risk. The other thing is you have a ton of catalysts, or we think you have a ton of catalysts out there. There's a lot of macro factors that I think people are sleeping on. People think that the transition in the Fed is going to be seamless. It won't be. People are sleeping on USMCA. In addition to that, this is a time of year where people begin to guide down expectations. It was a great year, but we have to manage expectations down. All this can really, lead up to a repricing of risk. The underlying fundamentals, they're okay, they're fine, but risk is just too expensive at this juncture.
So when you say repricing of risk, do you see a reallocation away from some of the things that trade much higher and maybe therefore one perceives as more risky into something with a lower PE?
Yeah, I think, I would say there are some of the risky stocks are ones without a PE. Right? If you look in the biotech space, and there's some reason for regulation, FDA, for that to occur because of scarcity value. But at this point, I think that's really played out. So can people move back into, I think what they're going to move back into is better risk rewards. And yes, they're going to have valuations, they're going to have an E. Just because you have a great story, I don't think that's enough anymore.
Chris, understanding it's not a straight line to get there, you have to And Tim is pointing out that Chris Harvey brought
Must
you
you do
candy,
that during the
and you didn't bring me candy.
I'm sorry, keep going.
No, that was just, and I told, you know what I said to Chris earlier, but we'll save that.
Well, we will save that.
Your earnings, you must be somewhere between like 325 and 350 in order to have the multiple and sort of where we are now. Is that fair?
Yeah, that's fair. So it's a little bit more than 325 for 2027. We're expecting a little bit of multiple compression toward the end of the year. But yes, we're expecting double-digit growth this year and next year, but a deceleration.
Chris, you just mentioned higher quality, ones with PEs, that sort of thing. It used to be, over the last couple of years, mega cap tech, right? That was kind of a defensive trade for all intents and purposes, but they also had the growth and they had this tailwind of the secular shift. How do you feel about that?
There's still some mega cap tech that work, right? If you look at Microsoft, it's a pretty good risk reward. However, we're finding opportunity right across the board. It's not just mega cap tech anymore. And the other thing is we were expecting 7,000 on the S&P this year, right? One of the reasons we were doing that is because we were expecting mega cap tech to have multiples expand, not just multiples expand, but margins expand. That's occurred. Now we're looking for places where the fundamentals can change, and that we think that's in the med tech space. We think that's in software. We think that's also in financials. So it's a lot more diverse this year.
Yeah, that was my question. Financials, what do you do with the move in financials at this point that in many cases, Goldman Sachs, no, or AI stock, no. I mean, it's crazy the move in Goldman. By the way, I believe they deserve it, but there's no question valuations are hardly cheap there.
They're hardly cheap. What we were saying is we think they need a pause or a pullback. Underlying fundamentals, again, they're fine. I don't think we've seen the whole deregulation play out just yet. Some of the credit card companies have pulled back first. Maybe you start looking there. Some of the insurance companies, if you're looking for diversification or low vol, it's over there. But we really want to see a pullback in some of these really strong performers.
Okay. I mean, interesting stuff. I do wonder if some of them have predictions for the Nasdaq, because of course all of them are just talking about the S&P 500 at the moment. So I wonder what if they were to say, because I think even Tom Lee is looking at just 10% for next year, right? 7,700 for next year. Here we have also close to that 9-10% gain for next year. They are looking at medical tech, software, diversified financials, and staples. Software have, of course, been hit this year quite a lot. I mean, this year barely participated in the bull rally, right? When you look at the likes of Adobe, Salesforce, Accenture, ServiceNow took a hit also. But we are seeing some moves when it comes to these types of names. But I do wonder if they have an opinion on or some predictions on the Nasdaq for next year. Talking about the PE aspect here again, yes, I agree. There are plenty of high-flying companies, which is literally what we just said before. There is no E, right? There is no E, so there is no reason to look at a PE, and some of them just became profitable. And so, of course, when you just flip and you are going from no E to E, meaning no earnings to earnings, the PE ratio is going to be high. But then the question is, how fast can or will you grow your earnings for that multiple to contract? And of course, it will only contract if you are growing your earnings much faster than the stock goes up. That's what we've seen with a SoFi, for example. SoFi had no E before. SoFi suddenly has E, and people were like, oh, look at the PE for SoFi. I'm like, yeah, okay, of course. You went from generating, well, nothing, a loss of 2 cents, to then generating 1 cent, 2 cents per quarter. Now we're looking at closer to 38 cents for the whole year. Next year, closer to probably 60 cents. So that E is about to go much lower, unless the stock goes super fast on the upside. The PE ratio for Palantir is, of course, also super high. Price to sales ratio is, of course, super, super high. Good question here. So I still beat the market by a mile this year, despite the pullback. I think a lot of us still, I mean, we're down from the high, but I think we're still all doing very well this year. Have you ever thought of moving high betas into Google? No. I have not because, well, the high beta names, I assume you mean the Nebius, right? The type of Nebius or Rocket Lab as well. No, because I don't want to sell. I don't want to sell Nebius. I don't want to sell Rocket Lab. I actually bought more Nebius yesterday, small addition, at around $81. But could I add maybe an Amazon? Well, again, Amazon, I do own Amazon and Meta in both portfolio, Amazon in the retirement one, so I'm not really forced to buy or chase that. I did take profits from Micron yesterday, so that added more cash to the cash pile. Sort of also a small defensive move, let's say. But no, because for me, nothing has changed other than the stock price, right? A month ago, stocks for Iron, Nebius, CoreWeave, all of these names, they were higher. Now they're lower. But did something change company-wise? No, they all reported. Reports were fine. Guidance was fine. With CoreWeave, there was that one issue for delay, but should be resolved. So nothing has changed. It's just that, yes, you get to buy these names at a less expensive price today than before. That's it. People, of course, love to ask the questions when things go down, not when things go up. Right? When things go up, you don't care because things go up. When things go down, then it's like, oh, why am I losing money? Is this company actually a bad company? It's the funny thing is that a lot of investors start to actually study the business when they start losing money, not when things go the right way. Which is an interesting behavior. Did I buy any CoreWeave? No, I only bought Nebius as one of the three yesterday, and it's probably only going to be that, maybe a tiny bit more of Iron, but other than that, I think I have enough exposure to this space to be happy with whatever will happen 12, 18 months from now. I did also buy a little bit more of Uber and Shift4 yesterday. So yesterday I increased Uber by 9.6%, Nebius by 3.3%, and Shift4 by 11%. That's what I did yesterday. If we do go lower, then again, I'll adjust accordingly. And let's see if we've got some more info for some of the things. We have a SoFi news here. So what the heck is this? What about my plan with the June options? Well, first I still have my deep in the red March ones, which I still have to figure out what to do with them. The June ones, I'm still giving them time. They're of course also red, but we have 2 earnings reports before they expire. But the first problem is going to be to solve the March one. It's either buying more 2027 January options or gamble and go with a riskier ones in 2026. But I'm still deciding. No, they said the delay, the contract is fine. The delay is just going to impact 1 quarter for now. That's what they said, from what I remember. It's just a 1 quarter that will get impacted by the delay. Why Nebius and Iron before CoreWeave? It has to do with what I already bought before. First of all, I like Nebius way more than any other company out there in that sector. Then I already bought more CoreWeave twice, and Iron just once. So it's just the way of buying and adding more shares plus allocation wise. That's it. Now, SoFi, apparently there is this announcement here. SoFi and Kashmir launch Culture and Capital podcast on early stage investing. Okay. Hosted by veteran Katy Perry. I assume it's not the Katy Perry from the music industry. No, because that's Katy Perry with one T, and this is one with. This is also one with one T. What? Katy Perry. It can't be her. Maybe it is her. But what does she know? I don't know. Strange thing here. Podcast produced by Kashmir in partnership with SoFi. Wait, didn't we hear about this already? Katie. Correct. Because I'm sure, I know this is something else. With Vivian 2, your rich BFF. So that was something else. Okay, whatever. Something new to maybe expand and grow the brand awareness around SoFi. We have here a small announcement. Fortinet and NVIDIA bring zero trust security to AI infrastructure. Okay, I don't think that will change the sentiment that much. Archer launches UK engineering hub, hires top eVTOL experts. And this we already looked at. Yeah, it came out a bit more aggressive than what I thought it would. But yeah, it's a strange announcement, not gonna lie. Strange. Now let's have a quick look at some names. So Iron. I mean, I literally covered this yesterday. Iron is a bit in no man's land, right between the 100 and the 200-day moving average. So that's on the daily. It's not oversold, but RSI is quite low. CoreWeave is also RSI is low, but it's still not at the same levels we saw. Well, it went actually under 70 at the end of November. So we'll see if we can maybe have a double bottom. Could be a good thing for the stock. As for Nebius, might have also a small double bottom here. Otherwise, to fill the gap from before the Microsoft deal, it still has to go down around another 17% or so. Pre-market, we are just under $80. To fill the gap, we have to go all the way down to $66, $67. That's for Nebius. Applied Digital went just under the 100-day moving average yesterday. Seems like it's going to open just on it for now. We did have a previous event here, also the end of November. It dropped below, then quickly recovered, and actually recovered quite quickly. Afterwards, Cypher also making its way to the 100-day moving average. HUT8 is at or just under it for the moment. And White Fiber is maybe also at a type of bottom from August, that is. And RSI is also not oversold for this name. Doesn't need to fill the whole gap. Applied. Yeah, you're talking about two things here. The Nebius one, no, it doesn't need to fill the whole gap. I'm just saying, if it were, it's another 17% on the way down. We already filled almost half of it once. Yes, I guess I learned something new. I am on YouTube and I'm a big Google fan and shareholder, and apparently there is a Gemini on YouTube. It never really crossed my mind to ask Gemini. I usually just take the link, go into Gemini and like give me the TLDR here. PayPal is up for now, 1.3% on that PayPal Bank news. MasterCard and Visa are green, but let's call it flat. Hood, after being down 3.5% yesterday, is up 0.2% at the moment. The 200-day moving average does sit at $92.80. Sezzle was up yesterday, closed out down. Block is same story, was up yesterday, closed out down 1%. The local is, well, yesterday we're just at the 100-day. Right now we're down another 0.8% or so, so it means we're just going to be under it. But there is very low volume at the moment. It is December, that's true, but it is a low volume week for now. Victoria's Secret, how did we get there? Wow. Okay. Who knew? I don't know. I didn't know, but Victoria's Secret is up quite considerably over the last couple of months. I don't know who invested in Victoria's Secret, but yep, congratulations. As for semi-names, right now it seems like we're not going to get the greatest day. At the moment, again, it's pre-market, quite low volume. Yesterday, Tesla did reach $480-something, all-time highs for the company. Amazon is at a disrespect here. Are we going to go back to 215, revisit of the 200-day? I mean, anything's possible at the moment in this market. Netflix is still 93.7. Netflix, yeah, Netflix is could be another turnaround type of, not really turnaround, just the business continues to do well. The stock is down quite a lot even before the announcement of the acquisition. We'll see what happens with that one. Yeah, I mean, Abercrombie has also been performing well, especially after the earnings report. It's insane how fast it went up. So it went up 37% after they reported earnings, and then yeah, it just continued to rally. Insane. So let's say you gambled before the earnings report, you would be up 77% now. Whew. Not too shabby. Is it a rotation? I don't know what's with Costco. Okay, Costco was also down 2.7. But then, yeah, when you're trading at what, 50, 40 times earnings, I guess even a Costco takes a little hit here. It's a bit in no man's land. Last week we know that Walmart is also, since the earnings report, up 16%, all-time highs for Walmart, insane. I mean, I think it makes sense. It will just take time. It's to get approved and all of that. It probably will take, if it happens, it's going to be 2027. It's a long time, but in the meantime, I guess they have enough things to work on. They have enough things to work on for the next 12 months. So whenever they get maybe the approval, the whole business should be in a much better place. Talking about AI companies, software companies, Databricks is raising over $4 billion at a $134 billion valuation and crossed $4.8 billion in ARR in October. Could help with valuation of, well, if they do go public maybe in 26, could help with valuation, especially for another privately held company, which is, what's the name? Nebius has a stake in that company. How can I forget it? It's like 99.9% of the time. ClickHouse. Voila. Oof. Could help with that valuation as well. Having very, very big, successful companies go public usually helps in the market. Because then you actually, If Anthropic goes public, we can actually see the financials of this type of business, which then makes us look at other companies in maybe another angle, right? Okay, Anthropic is that valuation, they are generating this amount of revenue, losing this amount of money, or maybe there is already some cash flow, free cash flow. Okay, helps us value other companies. If these companies just stay private for a long period of time, then you will never know. You will never know, and you cannot adjust the way that you're thinking about, okay, this smaller AI player, that smaller AI player. I do hope that Databricks goes public next year. I hope that Anthropic goes public next year. I hope that OpenAI goes public over the next 2 years. So at least we get to look into these companies' financials. I think that would be great. And in the meantime, we just have to follow the companies that are public at the moment. Am I surprised that AST is taking a hit? No. Am I surprised that Rocket Lab is taking a hit? No, because look at how fast these two companies have run up because of the potential SpaceX IPO, Rocket Lab launches plus some Neutron news that came out, or pictures. Same with AST, some news with regards to the company, but the rebound has been quite quick. Valuation-wise, it is expensive. I think everybody can agree that both stocks are quite expensive today and are trading at a big premium. Yeah, Rocket Lab, I think it's the 19th launch already, so not bad at all, but you are not paying the huge premium because of Electron, right? You are paying the big premium because of the success of Neutron, which hopefully it's still on track for Q1 2026, which means another 3.5 months from now. And now I understand why my watch time on certain videos are down. Gemini on YouTube, you will see an icon posted on non-live videos. Okay, so not this one. Can summarize them and ask questions. Okay, I assume you are from the US because I don't think I've seen this button available to me. Watching videos in 2x. I usually watch videos in 1.25 and then reduce it to 1 if it's a video where I actually need to listen and learn something. But if it's just pure entertainment, then yes, 1.25, sometimes 1.5 is enough. You see it in Mexico? I don't see it. I guess it's not yet available. I only got my YouTube recap yesterday. So it takes a while, I guess, for YouTube to go and release it to every single user. And thank you all for watching the videos. This year has been an amazing year so far. Let's try and end the year on a high. Seems like the Santa rally that was maybe promised to us, well, it's not happening at the moment, which I think Kyle, Stock Goat, is not happy at the moment, because he said that if SoFi is not at $25 in January, he's going to shave his eyebrows. Well, SoFi is dangerously close to going under $25, so I hope for his sake we do get an end of the year rally. And with that said, ladies and gents, ding, 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 bing, bing, bong, bing, bong, the markets are open. As you can see, we are a bit all over the place at the moment. It is also December 16th, which, now that I mentioned this, I still need to call my friend because it's his birthday today, and the second friend didn't answer, so that's on him. But yeah, markets are open. We are again seeing some green, but let's not get fooled, because yesterday we also saw green. And then, well, we got slapped in the face. the green didn't last. For now, let's see. Let's wait and see what happens. Let's see. Close the poll. Thank you for the reminder. Close the poll. Voila. And yesterday, 55% of you were mistaken, by the way. We didn't end green, unfortunately. So right now we have 57% say red, 30% green, and 13% say flat. Do we have earnings today? I don't think so. Or, well, we have some companies report, but I don't think Micron is tomorrow. So that's definitely not today. Micron is tomorrow. And Nike is Thursday. So my plan with Micron, well, I already took profits. Yesterday, a little bit. People are saying there is news around CoreWeave. We just spoke about it. So maybe that's why the guy... Okay. Let me pull it up, if I can find something. So, CoreWeave. I don't see any news CoreWeave-wise. I mean, nothing new. Maybe it doesn't pop up. Let's see. Maybe we're all talking about the same Wall Street Journal report. Because the report just talks about what happened, what they told us during the earnings. I mean, the Wall Street Journal piece talks about what happened during the earnings report. So it's not new. I guess they like to recycle stuff to make it seem a bit more dramatic, but it is nothing new. Then, other than that, we do have some other news. So from Amazon, from the CEO of AWS, he said that at reInvent, which is their event that happened, I believe it was last week, the start of last week, about 90% of executives in the room already see positive return on investment from AI or a clear path there in the next 6 months. After 2 years of being misunderstood, he now calls AWS by far the strongest agentic platform to build on. I mean, didn't I say this yesterday? I think I did. I said that next year you are going to see a lot more of the non-AI companies start to show the profit side of it. Those that won't, then I guess it doesn't work for them, or maybe they haven't invested in AI enough. But in 2026, I do think, and that's why I've said that the rotation in some parts makes sense, rotation towards the companies that use AI to make their core business better. And yes, I do still think that Amazon is a no-brainer. I do think that Amazon is a no-brainer going into 2026. Jobs data, okay, this we've seen before. Multiple job holders now make up 5.8% of all employed workers in the United States, the higher share since 2000. I do think that I've touched on this earlier this year. It's people that have 2 jobs to cover the costs. Earlier this year, that was already quite high. US manufacturing payrolls are now at the lowest level since March 2022. So, I mean, construction is fine, I guess, which makes sense. Manufacturing, well, lower the rates, and I think we should see lower the rates, permits, regulations should help it. So let's have a quick look at some specific names. profit from Micron. Not good idea before end of 2026. I'm still exposed to Micron. But when you're up 175%, I don't think it's a bad thing. At least not for me. At least not for me. All right, let's have a quick look at our list of names here. Let's start with big tech companies. So, of course, after being up yesterday quite a lot, Tesla is now down 1.2, 1.3%. Google is down 1%. Apple is down 0.5%. Microsoft down 0.2%. Meta is flat green, 0.1%. Same with Amazon. Netflix is up 0.2%, and Oracle is up 1.4% at the moment. Switching to the chip names. Broadcom is also the flipperoo here. Broadcom down yesterday, up today. Intel up 1% today. Lam Research up 0.8%. AMD 0.5%. Clack 0.5%. Micron 0.1%. Nvidia flattish to red. TSM same thing. Marvell the same. Applied Materials yesterday was green. Yeah, closed out barely green. Today is a bit red. ASML 0.4% down and Qualcomm 0.6% down here. Rusty, thank you for the super chat. Really appreciate it. And again, appreciate all of you joining the stream. And it seems like we do have over 600 people that are watching right now. So thank you very much. It definitely makes the stream go by much faster because we have a lot of questions, a lot of interactions. So I appreciate all of that. Then NeoClouds, we have Applied Digital, that's up 4.6%. And remember, CoreWeave has a 15 billion 11-year deal with Applied Digital. They're a pretty big deal for them. So one goes up, the other goes down. At one point, the disconnect will not make that much sense. Plus CoreWeave does have, it's down 2%, it was down 3%. CoreWeave still has $55 billion in backlog, and that almost doubled last quarter. So they'll generate around $5 billion of revenue for the fiscal year. CapEx is, of course, going to increase double next year. So still CapEx heavy. Nebius, flat for now, still here just above $80, did drop just below. Iron is up 0.6, Cypher 1.4, White Fiber 1.4, HUT is up 2.8, back above the 100-day moving average, and of course, Applied is also now back up the 100-day moving average. Moving on to FinTech. Nu is the one that's down 1%, 1.1%, so we'll see what Meli does. MasterCard and Visa down 0.2, 0.3. Shift4 is up 0.1, same for Adyen. American Express is up 0.3. Klarna is up 1%. Chime is up also almost 1%. dLocal is up 1.4. Dave 1.5. Block 1.8. Bull 1.5. PayPal is up almost 2%. Ladies and gentlemen, let's not celebrate just yet because we know what usually happens with PayPal, right? Exactly. We've got Pagaya that's up 1.5. SoFi is up 2%. So Kyle's eyebrows are safe for now. Hood is up 2.8. Affirm 3.2. Well, Sezzle is up 6.3%. It's one heck of a volatile stock, Sezzle. That's for sure. No, I didn't buy more, at least not this week, of dLocal. At least not this week. I think last time I bought was maybe 2 weeks or so ago, something like that. The correction only started for companies like Iron and Nebius. I mean, if a 50% drop, 55% drop is not enough for you for a correction, then I guess nothing is going to be enough, right? A flushing toilet sound for PayPal? Well, that's not how we are going to get Alex Chris on the channel. But let me actually see if I have something here. I don't think I have, but I have this. in case I make funny jokes and nobody laughs. Thank you very much. Thank you very much. We're going to be here all day long. Not really, not all day long, but it seems like the green is really not going to last that long, at least not for some of the neo clouds. They have now turned red again. I mean, they've been red, but redder as of now. Yeah, but yield max, you know, we just talked about this, which is fine. If you didn't join before, that's okay. There is no point in looking at PE for these companies today. In the future, 100% with you. If in the future there is no indication of them becoming profitable or path to profitability, I agree with you, shouldn't invest in these companies. But I do think that today it's too early to just say, oh, the PE doesn't make sense. I will only invest when PE is low. For some of these companies, there is no PE to look at because there's no earnings at the moment. Over time, there will, or hopefully. But right now, yeah, the PE thing, I don't think it makes sense. And I do agree here. I do agree. I don't remember the last time I actually even saw a video of Meet Kevin. Joseph Carlson, yep, I agree. Or me, you could always watch me. That's also a good option. Yeah, chip names all turned red. Lam, yeah, now red as well. Broadcom is still up 1.4. Big tech, also almost all of them are red at the moment. Fintech names are the one that for now are still holding up. For now. Let's see. Throw away that intelligent book, investor book? No, don't throw it away. Still some good lessons to be learned there, but again, the companies today are very different than the companies 60, 70 years ago. Right? It's very, very different. 60, 70 years ago, how many software companies existed? Zero, I think. Right? So it's a complete different, different games. And sorry to say, but there are way better books out there than the Benjamin Graham one. What did I want to say? Oh, Melly. So yeah, so Nu and Melly are down literally 1.44%, both of them. Yeah, I mean, I repeat myself every time, but yeah, Melly, to me, under 2,000 is a gift, is a gift. Rubrik continues to go down and fill that earnings gap. We're now halfway there and sitting just above that 50-day moving average. I said it, if we go back to the lower 70s, I am going to buy more. If we go back to the low 70s. United Health still around the same price, which makes sense. Oscar still around $16, still around the 200-day moving average, makes sense. Uber is down 0.5% today. This one does not make sense. Is it a gift? If you look at the business and you like what you're seeing and you believe that this is not a business that will be destroyed by AVs but actually become better and bigger, then yes. But I'm biased because I own it. My favorite investing book is probably the one up on Wall Street. Easy read, very good lessons, and very relevant no matter how you invest. Peter Lynch, to me, Peter Lynch is my go-to guy. He doesn't overcomplicate things, and the lessons can be applied to various sectors in the stock market, so easy one. But I did once make a big community post with the whole list of books, because I also like to read just books on behavioral economics and things like that. I think you can learn quite a lot from those. Also books about CEOs and company specific, the story behind it. You can learn a lot about that. I mean, Amazon, the whole story, Jeff Bezos, I think is a very good book. I think one book I bought for $1 on Amazon was like either it was a mistake by them or a huge promotion, like all of the letters from Jeff Bezos from Amazon put in a book. I saw it. I saw it's 90% off. It's $1 something. I was like, okay, let me buy it. I think if you want to buy it right now, it's a bit more expensive than that. But yeah, Netflix, I said it. If I were to open a new position, I think it would have been Netflix. But right now, I don't see why I should open a new position. Would Peter Lynch invest in neoclouds? Probably not. I mean, I don't know, but probably not. If he doesn't like it or he doesn't understand it, he probably does not want to invest in neoclouds. And that's fine. That's the whole thing. You invest in what you understand, and your journey goal is very, very easy. I mean, easier. So yeah. But hypothetically, if I were to close out completely out of, let's say, Alibaba or Micron, then the Netflix would probably replace them today. I think, yeah, probably. Yeah, so PayPal is now not up 2%. Oh, are we surprised? No, we're not surprised. Can I read ebooks? I think so. I know how to read, so I guess yes. You mean, do I have the... What's the thing called from Amazon? I do have it, yeah. I do have it. I do like to listen to audiobooks as well. I think it's also a good thing. Yeah, I started to read *Sapiens*, and then I stopped reading. And then I stopped reading it. Kindle, thank you. I do have it, but I prefer paper in my hands. I don't know why. I just prefer to have the book in my hands physically. I like to have like a library of books. I know someone that's allergic to dust, it's not the best thing to do, but I like it. 1929 from Ross Sorkin. I started reading it. Very, very good book. Very, very good book. Highly recommended. Duolingo or Netflix? Well, I do own Duolingo. I am not willing to put more money into it despite it helping with a lower average. The reason is the same reason I gave before. I have overcommitted. The timing was not correct. And now I'm like, let's see if their strategy works out, right? Their willingness to forget about monetization for a moment, increase monthly active users, daily active users. 1929, the book, well, it depends, because yeah, it isn't a short book, but it's a very, very good and easy to read book. Very, very easy to read. It's a good book. You might not like him, but Billions to me was a great TV show. Thanks to him. I mean, partially thanks to him. Too Big to Fail, his other book on the 2008, Too Big to Fail, I think so, financial crisis, was a very good book. You don't have to agree with him politically or whatever, but he does know how to write good books. And the information that is written there is just factual information that he gathered and put it in one book. And yes, they will turn this into a TV show or a movie. I think it would make for a good movie, actually. Iron is now down. I assume all of them, yeah. All of them have now turned. Oh, Nebius is holding here. Iron is down 2.4. CoreWeave at 70 at the moment, which again is same levels as before. So if we can hold that, I think that should be a good if we can. Is he calling this a bubble? I mean, he wrote a book called 1929, so. But I don't think he calls all of this a bubble. It's just asking the questions that most of us are asking. Unfortunately, we're not always going to get the answer straight away because, as I keep saying, it's too early. It's too early, but 26, especially going out of 2026, I do believe that a lot of our questions are going to be asked. Okay, maybe something happened with Cesar because it's up. Ah, yes, share buyback program. Okay, makes sense. So whoever owns Cesar, there's a $100 million stock repurchase program that has been authorized. I guess that's why the stock is up 10.3% at the moment. Barcelona play later today. Yes, against Guadalajara, no? I think Copa del Rey. Chelsea also play later today against Cardiff in the... Yes, I was correct. In the Carabao Cup. And congrats to... well, no, actually, no. Manchester United played yesterday. 4-4 against Bournemouth. Bruno Fernandes scored a magical free kick. But thankfully, they didn't win the game. Thankfully. This is a good one. December. Good one, Alex. I like it. I like it. Let's see. Do we have some more news? Not really. Hassett is saying that a shutdown is not going to happen. Although, again, according to Kalshi, it seems like it's not that out of reach. Government shutdown. Let's see if it changed since his comments. No, still the same. Still 37%. But yeah, was higher a week ago. Did I know? I did not know it. I did not know it, but I'm not that surprised either because it's the League Cup. It's like if you need a trophy for the season, this is literally the one you want to go and try and win. So you're like, good enough. Robinhood live event today it's probably the prediction market live event for Robinhood. I assume it's the one with the 1 and 0 or something like that. Let's see if we can find it. I think so, no? I told you will be green. Well, Fintech is green. NeoClouds not so much. Chips is 50-50. And okay, Big Tech. Okay, maybe I'll show the maybe the heat map is a bit. The heat map is. Well, the heat map is fake because the heat map should be like this. Voila, better. Much better. Okay, let me check Robinhood. Yes, later today is the yes and no event. So I mean, to me, yes and no is the prediction markets. It's going to be a huge business for them. You know my opinion. I just don't like to mix the gambling with the investing. Some of Kalshi and whatever are saying that it is not gambling, it is predictions. Well, but it is gambling. Point. Period. Why is Tesla pumping so hard? Yesterday it was up because of that video clip that was shown about the Tesla with no driver in it. And Elon said that they are going to expand that and release it to the, well, I won't say masses, but release that version without a person sitting next to it. But yeah, if you try Tesla FSD, I mean, you know it's quite mind-blowing stuff. I mean, the prediction markets is, you might not like it, but if you're an investor in Robinhood, you know it's a very good business to have because they're going to make quite a lot of money from it. It's not cooking, it's stir frying. It's not eating, it's ingesting. Good one. Good one. Serve Robotics. Serve Robotics is down today a little bit. Yeah, it's down a little bit today. Yesterday it was down, also 9.5%. Okay. Ah yes, the usual Figma stuff. Still 36, yeah, still 36, up 2.7 today though. What about crypto? Because I saw that BMNR has a new CFO, if I saw it correctly. So Bitcoin is up 0.7, back at 87,000, and ETH is back under 3,000. Where is BMNR? Here, back at 30, just on the 200-day moving average actually. So I think the CFO left, or there is a change of CFO, right? Let me see. BMNR. Or maybe it was a fake post. Maybe it was a fake post, I don't know. No, BMNR CFO resigns. Okay. Wait, is it this one or this one? Separation agreement and general release with its chief financial officer. Okay. A bit strange with the timing, but fine. Do I have any comments on Japan? Travel-wise, great country to visit. If you are talking about the what's going on there with them selling off the ETFs and all of it, and the carry trade, no comments at the moment. I can make up stuff, but I don't have to comment on it at the moment. A lot of moving pieces, so I prefer not to talk just for the sake of talking. Once I understand the whole shebang better, I will share my opinion. But for now, I will do as Jose Mourinho. If I speak, I'm in big trouble. I prefer not to speak. Yeah, Sezzle going up. It's again the one. You see what happens when you announce a share buyback program? Imagine if Tesla, well, Tesla, yes, but imagine if PayPal said, we are going to accelerate our buybacks. Poof, I think we're also going up quite a lot. In my humble opinion. Japan might raise rates on Friday. Okay, by, let's see, BOJ rate. Let's see. Bank of Japan to take interest rates to 30-year high. Yeah. Let's see. Is it this? Oh, this is crazy. So if you look at Japan interest rates, or actually let's do this. Ah, this is a feature. Okay, forget about it. Look at this. They are currently at 0.5%. So yeah, I guess things are about to change, but it's not like we are. I mean, it went high quite quickly when you go from literally 0 to 0.5%, and you're going to go even higher. Things do change. And the next one, yeah, the next one is the 19th of December. So consensus is for 0.75. Previous was 0.5. Okay. Yeah. Okay, interesting. Interesting. Ah, it is, yeah, to answer this, I am still bullish, Baba, yes. In a market where everything's, let's say, overvalued, although I don't agree with it, but Alibaba is still very cheap, and the business is doing well here. My favorite fear and greed bullshit index, let's say, it's been a while. CNN fear greed. Cannot be, I can't, it's, how is this even? It's neutral, sure, it's neutral. So we went from extreme fear a couple of weeks ago to now already neutral, despite what? Despite a lot of the names still being at the same levels as before. It doesn't make any sense. This doesn't make any sense, but okay. Well, whatever, right? The fear and greed index. I do wonder how they learn more about the index. The theory is based on the logic that excessive fear tends to drive down share prices and too much greed tend to have the opposite effect. Well, we are neutral now and things seem to be going down. So this doesn't, you have to update your FAQs here. All right, whatever. We started the stream with the probability of a rate cut in January sitting at 24 point something percent. Then a couple of minutes later, that jumped to 28%. And right now, at the end of the stream, we are at 26.6%. So we went up, then we went down. I still don't think we're going to see a cut in January, if you want my opinion on it. All right, let's see what we got here. A bit more green than in the open, that's for sure. A lot more green, actually. I have to send something to someone. Voila. That has been done. I mean, you still made money. Extreme, yeah, it's extreme fear and extreme, maybe fear mongering, I would say, in the AI corner, for sure. Your New Year's promise is not to sell a single stock in 2026. Aha, my question is, do you own any stocks going into 2026? Am I buying more iron for now? Well, for today, I'm going to sit on my hands at the moment and see how things evolve. Yes, but this happened last week. So last week we already had a big move when this was announced, and today the move is purely because of the share buyback that was announced for Sezzle. Yeah, I mean, yes, I agree. On the SoFi front, SoFi is up 3% today. Let's see. SoFi, where? Hey, oh, hello. I see. So it's trying to recapture and go back above the 100-day moving average on the daily for SoFi. Yes, if we look at it across the all of the high beta names, right? The neo clouds, I'll even include for you guys the quantum nuclear names. SoFi is by far the safer name out there, of course. I mean, SoFi has earnings, SoFi is growing in a profitable way. But yeah, I agree. So yeah, last week, can't remember where it was, but yeah, here we got the small cap thing announced, then it dropped 50-day moving average, now a rebound from 2 days for Sezzle. Pagaya really took a huge hit, like 9% on Friday and then another 5.4% yesterday. Today trying to go back a little bit higher. PayPal can't stay being up 8%, so congrats there. Do we have... voila. If we add this, let's see. We have our little volume thing again. Yeah, here, the moment we get back closer to 70 is really going to be an interesting point for them. Someone did make an announcement from PayPal about them presenting at CES. It has a lot to do with the advertising platform. So that's the first week of January. Hopefully we do get a lot of news. I think 2026 we're going to hear a lot more about the PayPal ads platform, especially small to medium-sized businesses. Could potentially move the stock just purely on sentiment, because an impact on the business, I don't know how big an impact of the business in 2026 ads will play, but them actually showing what they're working on, maybe some results already, could definitely help it, for sure. But we still have to make our way back towards 70, and then yes, closer to 70, it will become a challenge. All right, big tech is turning green here as well. Even Google is green. Was down 1%. Amazon is green. Let's see what we have here. Yeah, it's literally at that big sell Micron options on 50%. I mean, I don't know what the option is. If it's an option that expires this week, expires next month, in 3 months, it depends. With shares, it's complete different, that there's no time expiring. With options, I guess, look, if your play was to make 50% and you have 50%, Micron reports tomorrow evening, so your 50% can go down to 0 quite quickly, or it can also go up. But yeah, that's the risk with options. I know it very well. How fast you can go from being up a lot to being down quite a lot. How is Nebius doing? It is down 2%, 2.1% now. So it looks like this at the moment. Which again, $90 seems to be an area where it will have to stay and fight for a while to go back up. Iron, let's see what we got here. So yeah, it seems like the 45 is one, and then the next one is here around $20. So still a long way down to go if it ever happens. If we go look at this time frame here. With CoreWeave, we are seeing the following. So Could be another bottom here, same as at the end of November. And then here as well, it seems like $90 was a resistance, is going to be a resistance. I think with CoreWeave, as long as there are no further delays, they should be fine. Yeah, chip stocks, almost all of them down, other than NVIDIA and AMD. With regards to the rest, we have Zeta back here at close to $18 for, let me actually remove this too much. Up 2.6%, Palantir is up 1.3%. Shop is back above the 50-day here, up 0.5%. Uber is still red, it's still down 1%. To me, it's stupid, just like last year. It was dumb for it to be trading around 60. I believe it's the same story here, just a better company today. Shift4 is red, down 0.3. Oscar is red. Mercado Libre, where are you? So Nu and Mercado Libre is still down 1.4, 1.5%. Iron price still tied to Bitcoin. I don't know if it's tied to Bitcoin because, I mean, we've seen Bitcoin, right? What is it? It's up today, iron is down. It's not like iron didn't drop before. So probably, I mean, still the majority, I mean, as of last quarter, they barely generated anything from the AI cloud business. So maybe for the market, it might still be tight, yes. You have to give up on PayPal opportunity cost. Can you tell us what you bought so we know what stock will for sure make us money? Because I would like to know. Yes, I mean, Nebius again, it's being valued for less than the combined Microsoft and Meta deal that was announced. Which is a funny thing to think about. But as you know, it's valued, now let's call it 20 billion, let's say. The contracts from Microsoft and Meta, it's not like, oh, here, free money, do whatever it wants. No, it goes into CapEx, infrastructure build out, GPU acquisitions, etc., etc. So it's not like flowing to the bottom line. We have to see how much of it flows to the bottom line to then say, okay, the market cap should be this, and that. Jason, you asked the question, I'm going to answer it in a biased way because purely from how much I own, I say Nebius. I own CoreWeave and I own Iron as well. If we have Jose on, he's going to say CoreWeave because he owns more CoreWeave than Nebius, but he also has a much better average from CoreWeave than I do, and I have a better average on Nebius than he does. But I like Nebius more for various reasons, which I've explained in the past. I'm still waiting for an answer here, by the way, because I am curious. I am curious to know for what you sold PayPal. Medline is a better opportunity than PayPal. They sell gloves to hospitals. Wait, so Alsh, you are now answering my Micron question. So $250, May 26 Micron calls. Okay, we are not there yet. We're $14 from it, but you would like it to reach it way before and go higher. So the question is if you want to risk it, right? Because if the earnings are excellent, stock goes up, you're going to be making a hell of a lot more money on your options. If the earnings, again, I think the earnings will be fine. Maybe the market is just saying, okay, it's very good, but we have already priced in all of it. And maybe the comments are not as good as what the market can say whatever it wants, right? But since you are playing with options, you're up 50%. Either you take your initial investment out, and so you're playing with house money. You might be sleeping better at night, or you risk it. You risk it for the biscuit, but you're up 50%. You're going into an earnings report. The market is really not in a forgiving mood at the moment, so your 50% gains can be gone by Friday. So, yeah. You may ask whatever you want. Why do I play memory but not storage? WDC, yeah, WDC, Western Digital. I mean, Western Digital and SanDisk have been performing extremely well. Why? I mean, I can say, why didn't I invest in this and that? Purely because I understood Micron better. It's in the semiconductor industry. It's in memory. We covered this for a while, and so I went with that. It's like saying, why did I buy this company and not that company? I don't know. Honestly, I didn't even think of Western Digital, and I do think I have a hard drive here somewhere. I have a Lassie one. And I do think I have, is it West? It is, WD. So I guess the signs were there for me to invest in those as well, but yeah. I don't think I'm sad with the 170%, 75% yesterday profit on Micron. Could I have made more with this? I assume, right? If let's say I bought it at the same time as a Micron, then yes, I would be up 237%. But it is what it is. Can't catch them all, and it's not like I made the less good choice, but I still made enough. CoreWeave and Nebius, and it seems like all the others as well here, are falling fast. Am I still a believer, and when will we see the turnaround? Well, am I still a believer? I am still a believer. I'm a believer. It's the song in Shrek. Oh, I saw her face. My concert is next week. We have here CoreWeave that's down 5%, Iron is down another 5%, Nebius is down 4.2%. Applied is now also red after being green. So again, full push on the way down, at least for these names. Maybe we have some news, maybe not, probably not. Let's see. If we can find something. For now, I'm not seeing anything. No, not seeing anything. So again, it's more, first of all, easy answer here is a lot of people selling a stock they bought at the highest purely because the stock went up and they have no idea why they owned it. Poof, weak hands, gone. More selling pressure. Then, sentiment in the market, right? Sentiment in the market around these types of names, around, Broadcom, ça va, around an Oracle, although Oracle is up 1% today, but Oracle, of course, went down also quite drastically. Sentiment isn't great around these types of names. So, am I still a believer? Of course, because nothing has changed business-wise. They all reported, right? Nebius reported, what was it, a month ago? Did something change since then? No, nothing changed since then. We actually had some more comments from them saying that inference is growing, 40% faster than there is demand or something like that. So no, I'm not. Am I sad of not selling? No, not really. Not really. I'm not. These are all hindsight comments, right? Am I sad for not selling Nebius at 120? If I knew that we would be down to $77, then I would sell because I know for 100% certainty that I would be able to buy it for 50% less. But we didn't know. You never know. Did I buy? No, I said I'm going to buy in the low 100s and under 100. It happens. And it happened. Cool. I'm accumulating more shares. Yeah, I guess people that bought it at 140 are definitely not happy at the moment. But am I sad? No, I would have been sad if I knew it would drop 50% and I didn't sell. Then I would be sad. Again, thank you here very much for the super chat. How do I deal with averaging down companies while trying not to become overweight on it? Example, down 20% on Nebius, but it is already 8% of the portfolio. Well, that's a good question. That's a good question. Well, first of all, Tiny Wolfie, why did I not buy at the low? Well, my average is much lower than the price we're at right now, so I'm still doing fine. If that was the question. But I'm going to combine it with the answer for this one right here. The example I gave with Duolingo can help with this here. It's with Duolingo, I made the mistake of putting too much money at first, and so yes, it became too big of a position for my liking, which is why I'm not willing to average down just yet. Here you're talking already about an 8% position in your portfolio that you're down 20% on. Question to you is, how much do you like Nebius? Why did you pay the price that you did before? Don't think about, oh, it was a mistake because, oh, now it's down 20%. No, you made the decision to buy for, I assume, close to 100, something like that. If you feel comfortable buying more today, not because you want to put your average down, but purely because you like the price that you're paying. Let's say you don't have a position today, would you buy Nebius at these prices? If the answer is yes, then why not buy it? If the answer is no, then one, you shouldn't have the position, and two, then I guess no, you shouldn't be averaging down and make that position maybe bigger than what you're comfortable with. Plus, if it does recover, you can always reduce your exposure. Do I ever touch European stocks? I consider Nebius a European stock because HQ is in Amsterdam, so I guess so. But I assume you're asking in euros and not in dollars. I did have Adyen for a very, very short period when there was that huge overreaction. But other than that, no, but it's not like I wouldn't mind, right? It's not like I wouldn't mind owning ASML a couple of months ago. There are some good positions, some good companies in Europe, but there's a lot more choice in the US, I guess. But you have good companies in Europe that you can choose from for sure. What is this one here? Yeah, so this was the previous stop back in August for Nebius, around $75. And to go and completely fill the gap, to go down another 13.8% to fill the Microsoft deal gap. It really is the period where people are trying to scam you the most. Huh? The amount of scam emails I get in my inbox is insane. And somebody tried to log into my email right now. Good luck, asshole. Yes, only Netflix. Netflix is the only one now on that list, just purely because the opportunity presented itself. If it was still at 120, I probably wouldn't talk about Netflix that much. But we are now in the low 90s, and yes, I do like it. I do like it a lot. What else do we have here? SoFi is still up 1%, so that's fine. Swedish stocks are boring, but there are some quality Swedish companies, high margin ones, like the boring business, but quality businesses. There is a lot of profit taking, I guess. There is, profit taking. Maybe people, again, getting scared out of their positions. This whole performance obligation thing, I guess, I don't know. I guess they've made up their mind about maybe underperforming this year, preparing for next year. I guess, look, ending, I hope we don't, but ending 2025 much lower means that in 2026, there is potential for a lot more upside. If everybody's thinking that in 2026, the market will only be up 10%, well, if suddenly their targets remain the same, but we enter 26 lower, then maybe 2026 will be a year where we can get another 12, 13% return from the market, individual stocks. We hope we can outperform, of course. A lot of people asked about Zillow. What happened with Zillow today? It's up 3%. So it dropped yesterday after news of Google testing home sales listing in search results. I mean, that makes a lot of sense. So me personally, I added yesterday. Nebius at $81 or so. So I'm not going to add today because we are down another 4%. If it drops way more, then yes, I will add more to that position. So this is something we covered at the start of the stream. I think it makes a lot of sense. It makes a lot of sense. I showed you my nice nano banana graphic, right? This thing right here. I think it makes a lot of sense, but it's not something we should be considering for the next 12 months or so, because it takes time until you get approved. It means that Nebius and Corey free fall every day, so there is no reason to average down now. Yeah, some people call it catching falling knives. Some other people call it buying or increasing your share count at a better price. But yeah, if you don't have cash or enough cash on hand, then I guess you can wait, or maybe you should even wait for a reversal in the stock. Yes, you will be paying more, but at least you're not going to feel like, oh, I should have waited for the stock to maybe drop more or bottom out. It depends. If you have enough cash, you can start to accumulate more shares at better prices. If you don't have enough cash, you just wait for a reversal and be willing to pay a bit more for the shares. I stopped after I read sell SoFi. There is no reason to sell SoFi. Sell SoFi, buy more Nebius. Your average for SoFi is 415. I know SoFi will grow, most promising fintech too. Some people would disagree. I would agree as well. But I'm liking more Nebius at these levels. I want to lower my average of 82. Again, this notion of having to lower your average for the sake of having a lower average is sometimes very dangerous because, as the other commenter said here, at one point you will be in a situation where you are going to be out of money pretty soon because, yes, you might see this type of free fall in a in a stock, where you're going to say, I bought, my average is down a little bit, suddenly a couple of days later, it's down even more. And maybe you could have used that cash to buy more shares at a lower prices, but then it's all hindsight stuff, you cannot time the market. Look, at the end of the day, it's up to you if you feel more comfortable taking profits from SoFi, putting it to Nebius, because you do want to own more shares of Nebius, and it also reduces your average a little bit. Your average, you just said, is $82. We're at $78 right now, so it's not such a big difference. Right? If we were in the 60s, then okay, it's something else, but from 82 to 77, 78 is not that much. Yes, I saw this. I saw this as well against Uber One, the subscription part. We'll see. I haven't seen a counter from Uber just now. I personally used the free, I was on free trial for Uber One. Didn't have any issues canceling it, and my deliveries were indeed €0. So, but maybe it is a thing in the United States. But we'll see. Uber will definitely respond because it is 21 states. Okay, it's a shame. It's a shame. For now I've only heard good things from people on X, people here in the chat. So sucks that you had a bad experience. I wouldn't know because I cannot use SoFi outside of the US. All right. With that said, I think we can all continue with our day. Let's see if something changed here. No, nothing changed. All right. So all in all, this is basically it. Fintechs are mixed green. Neoclouds are still bleeding. We shall see each other back tomorrow morning. I do appreciate all of you joining. It is becoming, of course, definitely a lot of fun. I mean, it would be much better if we see more greens than red. I know that during red days, people do want to hear or listen to answers. But yeah, I appreciate all of you joining each and every day, each and every morning or afternoon or evening, wherever you are. But yeah, it's been a pleasure. Let's all have a wonderful day. Hopefully the market will turn. We do still have a CPI report that will come out later this week. So stay tuned for that. Hopefully me tuning off means the market is going to rebound a little bit. So anyways, thank you all and have a great rest of your day. Bye-bye.